What's up, everybody? Welcome to HPT, and today we are going to break down a loss. I'm going to break down a loss, and more importantly, I'm going to break down where I believe I went wrong. See, trading is all about self-analysis, right? It's all about figuring out why it is you're fucking up, right? It's all about identifying setups, executing on them, executing on your strategy, but more importantly, when you don't, you have to ask yourself why. Right? I made a mistake yesterday that I want to break into. I want to break into how we traded today as a result of yesterday and our self-analysis and what we found, right? Because trading is all about figuring out, like I said, where it is you're going wrong, right? The main reason why most people fail is because they can't look at their own behaviors, their own actions, right? There's always a reason. They're always like, oh, yeah, the market got me, or the large money got me, banks liquefied me, right? No, in reality, you fucked up, and you need to figure out where it is you went wrong, right? So that's what we're going to do today. I made a deliberate bad decision yesterday, and it was because I missed a setup, right? So missing a setup led me to chase a trade that I would have never taken, right? So we're going to break that down. Let's share the screen here so that we could dive deep into what happened. And, you know, the reality of the situation here is you are going to, oh, what's going on here? Hold up. You're going to make mistakes, right? Like there's nobody, hold on, let me get this right. I can't multitask here. And also I'm going to throw this link here. All right, we're going to post that. Let me get this right and make sure everybody could see everything. Testing. All right, you guys hear me? Cool. All right, so topic of today's video is going to be identifying issues, bad behaviors that are leading you to make bad decisions in the market, right? So yesterday, you know, anybody that's been trading knows the market has been a very low volume, right? And with very low volume, oh, hold up. That's throwing me off. I don't know what the hell that is. With very low volume, you're going to be tested, right? And what do I mean by tested, right? So what I mean is it's our job as traders to figure out, hey, opportunity is in front of me, therefore I'm going to act. Much like poker, right? I was talking to a client of mine. Trading in poker or blackjack are extremely similar, only if you can be patient and allow your edge to present itself. And once it presents itself, you act. That's your job. If you get pocket aces in poker, you bet on it, right? You act. Why are card counters successful? Is it because they can predict what's going to happen? Absolutely not. Is it because they're extremely smart geniuses with extremely high IQs? No, anybody could learn, right? Card counters are successful because they count the number of face cards that they see, and based on how many face cards that they see, they then go, hey, I'm going to bet high or low. That's why they're successful. What does that sound like? That sounds like a consistently profitable trader. When I see my edge, I'm going to bet appropriately, right? Just like the card counter goes, hey, the count is -5, right? And what that is a calculation of how many face cards he's seen divided by the amount of decks being played, right? Based off that number, he then goes, hey, there's a higher probability of the card being flipped to be a face card. Therefore, I'm going to bet X amount, right? So the card counter has a basic understanding of his environment and of the market conditions, right? He has an understanding of how many face cards have been shown and played. Therefore, the odds are in his favor or they are not. So that is the exact same thing with trading. We have to be able to understand, hey, based on current market conditions, the odds are in my favor. If we can't do that, right? If we become impatient, if we want to force a setup, right? Because, you know, this used to be a big problem with me, and it pops up here and there after the weekend, right? Throughout the weekend, we're diving into charts. We're talking about trading. We're getting pumped. I had a fantastic week last week. So once again, I'm very excited to get back into the market. The 9:30 bell goes off, and we got extremely low volume. I know this. right? It's easy to tell. Candles are barely moving, and they're extremely wicky. Let me show you the day, right? Not today. It was yesterday. So real quick here, let me just get my pin numbers right, because that's how we can properly. Oh yeah, okay, they're good. So the market looked identical to this. We got previous day high, we have end of day, we have previous day low, and we got previous day open print, which is this yellow line here, right? So real quick, let me just get rid of this guy. All right, so now this looks good, right? What's going on? Hold on, this day right here. So once again, bring it back to the card counter. He is successful based on his ability to spot his edge. This is why I'm always talking about your edge needs to be extremely clear. You need to be able to see it and execute it. And I seen it yesterday, right? We get the moving average cross right here, open print established, and we get a green bar right here, the 935 candle that was ignored, right? So it was really far away, but this is our setup. This is our edge. I should have entered in short either here, or since we were extended from the 9 DEMA on the 5-minute, I should have waited for the retest of this GBI. Now I'm going to show you guys something very important, right? Because that GBI played a massive role throughout the rest of the day. Look at it. Every time buyers push price into this GBI, it was met with selling. It was met with selling, right? So instead of taking that short like I should have, and there were some other external variables, right? We were very extended from the 1 hour time frame. There were other reasons why I chose not to short this, but that wasn't the problem. The problem was what I did after, right? So instead of me shorting this trade in the morning, I stayed patient and I started to conjure up a whole new strategy in my mind, like went full retard and was like, okay, since I missed the short play, how about I play longs back up into previous day high and open print, right? So yeah, we were very extended from the 1 hour time frame, and I'm about to show you guys here what I mean by that, right? So every time you get extended from your 1 hour, you guys know it, I preach it constantly, there's a very high chance, very high probability of a pullback, right? So in my mind, I was willing to take the market long, targeting previous day high, right? And we had a very good trade here off EOD. Look, price came into end of day. We got a nice pop. So instead of going short right here, like my strategy tells me to, like the data tells me to, I go, hey, I'm going to go long right here, right? Now, I could sit here in front of you guys and go, oh, but there was valid reason. There was, my edge was present. There was all this reasoning, right? But in reality, being extremely self-critical is very important. Why did I take that trade? It was because I missed the morning setup. I failed to execute on my strategy. Since I failed to execute, I then went, hey, Josh, make up for it. And this is where we fuck up every single time. Whenever we break character, which means we don't follow our strategy, we try to make up for it. And when we try to make up for it, we literally end up forcing a setup that doesn't fit our criteria. That's where I went wrong right there. This wasn't necessarily a bad trade. It's in I want to be very important that I clarify this and say this extremely clearly. The trade wasn't bad. My mentality, my reasoning, my paradigm was bad. And what I mean by bad is I forced a setup because I missed the appropriate setup, right? So if I was a card counter, I would have took a bet, not based off the count, right? I would have literally been gambling. And this is the difference here between acting on your edge and gambling, right? And many of you probably aren't consistent, and this is probably why, right? Because whenever you are continuously making these sort of decisions, this is where your inconsistency is going to come from, right? See, I made this decision. I was like, okay, I broke character today. Therefore, I'm not going to make another trade. And I didn't. I ended up walking away for the day. I didn't like where my head was at. And also, the conditions were trash. It is so important that we know when our edge is present and when it is not. This is why I love trading the critical level. I love trading the moving average cross. This is why I love trading the RBI GBI, right? Because look at here on the 5-minute time frame. Look at that GBI that I should have shorted. Look at how price reacted every single time it came into it. Reject, reject, really strong reject. Then we got a beautiful play here off end of day. That was a beautiful trade. I'm not saying that there wasn't good setups this day. It's just that the conditions weren't good. They weren't appropriate. So I took that setup and then I walked away for the day, right? I was done for the day. Once again, we're not defined by a losing trade, but we allow ourselves to learn from our losses. See, nobody's going to hold your hand and be like, oh, listen, oh, that trade was okay. It just didn't go your way, right? Don't sugarcoat the shit. Why'd you take it? You took it because you missed your morning setup. You failed to execute appropriately. Therefore, your result is red. Boom. You got to become extremely self-critical, and it's completely fine, right? Like, that's a part of the game. You don't learn when you're winning. You learn while you're losing if you're able to actually dive into it, right? So that was the trade that I took. What was this? 2/18/2025. Market started to sell off. Looking back, right? Anytime you're below previous day high, right? That, like, if you're above PDH in pre-market and you fall below PDH, guys, that is bearish, right? So basically, I really shouldn't have been looking for longs until buyers took back at least open print, right? According to the way I like to trade. So that was Tuesday's trade. Let's dive into today's market. So today's market was a little bit tricky as well. Once again, very low volume in the morning. Look at these wicks. They're all over the place. So after yesterday, I went through my trades. I was like, all right, hey, completely fine. You took a loss. What are we going to do about it? Well, we're going to focus completely on execution, and we're going to rinse repeat, just like we always do, just like the data plots that are listed in the description below, right? We follow a very strict strategy, and it's only effective if I can follow it, right? Just like the card counter. So open print established, buyers push price below it. There's no moving average cross, therefore no trade. Buyers end up coming into the market. We get a very strong push. Right now, I want to point this out here. Very strong push. Look at this candle. Very strong push. Price retraces back into it, and then a green bar, and then I take the market long right here on this candle when we blow the top of this candle. Very valid trade, right? I'm not necessarily upset with myself with this trade, but there is a few things I would like to point out. Right? Very violent move. Massive move. Look at this move right here on this candle. The range here is almost $1. In comparison to the morning candles, that's a massive move, right? That's a mega move. Now, coming off of a day like yesterday, I made it very clear to myself, I'm going to be trading my edge today, nothing else. So we got our edge, we acted on it, and what happened? Boom. Stopped out of the trade, right? Now, this is why it is so important for you to execute every single time you see your setup, because I failed to execute the day prior. So the day prior would have been a winning trade. I executed properly today, but it was a losing trade. It's 76% win ratio. It's not perfect. So now I'm sitting on 2 losing trades instead of 1 win, 1 loss. Do you see how important it is to execute when you see your criteria, right? Because if you fail to execute appropriately, that is going to be a ripple effect that is going to affect your equity curve, right? If we are in the business to becoming profitable, we have to identify our edge and act on it. No ifs, ands, or buts. When you see your edge, you act, right? And it's so important because the time you choose not to is going to be the winner, and the time you choose to is going to be the loss. right? You have to let the equation work for you. We don't work for the equation. The equation works for us, right? Yeah, they're just like Todd's saying, no hesitation. When I see it, I act. And that was beautiful. So I felt really good about this trade. Yeah, I got stopped out for a 22% loss, but I know my approach is repeatable. Therefore, as long as I can execute my approach, I will be consistently profitable. And that is why it's so important. That's why you need to dive into your trades and you need to really figure out, hey, why am I making the trades that I am? Is it because of FOMO? Is it because I'm hesitating? Am I waiting for too much confirmation? That is one of the biggest retail trading killers in the world, is waiting for too much confirmation, right? You have to have a very strict criteria and you have to take it. I would take this trade again 100 times because I know 76 of them will be profitable. Right, so then the market ended up rallying. I ended up taking one more long play. Where was it? Right here. This was a very good play. Price rallied up, broke PDH, consolidated. We got a really nice long play. Oh, I'm sorry. Nope, not right there. I took it right here. Now, before we hop off, right, I just want to break down here the power of the red bar and green bar ignored. Went long, trimmed up here, ended up stopping out of the position here. But what I want to talk about is look at how once you get, all right, my bad. If buyers can defend it later in the day, you have yourself a better understanding of market conditions. Look at how buyers held it. Just like we were talking about the day before here. That initial GBI in the morning. It's like a wall. Why? Because there was tons of volume at this level. So because there's tons of volume here, it's going to take 2, 3, 4 times for buyers to push through it. Right? So key takeaways from this video. Number 1 is act on your Number 1 my bad. Key takeaways from this video. Number 1, act on your edge. Do not hesitate. We collect data for a reason. We must follow it. Our equity curve relies on it. It depends on it. Not on your strategy, but on your ability to follow it. Number 2, always never trade against the initial RBI or GBI. Unless you have collected vast amounts of data on reversals, don't trade them until you have a solid edge. The way I trade, whoever controls the open, I am not going to fight. And number 3 is if you do miss your edge, because it's going to happen, you're going to be walking your dog, you're going to be doing something. If you do miss your strategy, do not force it for no reason. Do not be the asshole that screws up his equity curve and blows his account or something worse, all because you missed one setup. Be disciplined. If you have to walk away, do it. And ask yourself, is consistency worth it to you? And if so, you will become self-critical. I heard this quote. It hit me very hard. Do you want to be right or do you want to be rich? I choose rich. The only way we're going to become rich is if we accept the fact that we're wrong and then change it. I love you guys. Thank you for the support. Thank you for listening to me, guys. Listen, you guys mean the world to me. Drop comments, share, like, do whatever you're going to do. I love you all. More importantly, you got this. Never give up on yourself. Let's finish this week strong.